You know, it's always fun when we welcome back to the program, and we've been doing this more often now. We bring in Jim Bottrell, who is absolutely fantastic. If you are looking to buy or sell a home, Jim has thebuyers.com is the place that you want to go. Jim has thebuyers.com. And let me tell you, it is a sketchy time. We're all scared because the interest rates are high. We all might want to go into a bigger, better house, but we feel like, oh, we got to stay locked into our low interest rates. We're going to talk through everything with you today. Jim Bottrell, thanks so much for being with us. We appreciate you.
Thanks for having me.
All right, so let's start with just a little overview about the housing market, because even though the interest rate is up, we're seeing not a lot of movement. Those housing prices are still really high. Do you see that this is a continuing trend? Are housing prices going to continue to go up, or are we going to see this bubble sort of burst?
You know, that's such a valid question. We all wonder if there could ever be a possible, limit to housing prices. It makes sense that the ever-increasing prices of homes would run out at some point in time, right? But the rate of appreciation in California over the last 39 years, and I would encourage anybody to Google this, for the home appreciation of 6.77% per year, every single year. Now, if you think about it, that includes the great market crash of the 2008 to 2012, plus the two other market corrections we've had, and it also includes the one we just had. The average appreciation is still 6.77% per year, every single year. However, logic would suggest that there has to be some sort of upper limit, right? But, the fact is Jennifer, I just don't think that there is.
Yeah. Now, why would you say that? Because it could be construed. People might be a little confused by that statement.
Well, I always joke, gravity is not an economic theory. What goes up must come down.
Come on.
Not applicable to real estate. It's not an economic theory. Gravity's great for physics. I love physics, but it's not applicable to economics. But I run into the same question myself. And literally I was sitting at the desk going, can this keep going? And what I did is I looked up the house that I grew up in.
Okay.
And I know that my parents bought this house in 1971, and they paid $29,000 for it. So what I did is I just jumped on Zillow, and I typed in the address, and I was shocked to see that house that my parents paid $29,000 for is now worth $1.25 million.
Wow.
That's 43 times an increase.
Wow.
So then I took it one step further. And again, I recommend every single person do this. Call your parents, call your grandparents, get the address of the house, their very first house. What is the address and what did you pay for it? And then jump on Zillow and look it up. And I took it one step further, and I looked up the house that my grandparents bought in the late 1940s for $4,000. That house is worth almost $2 million today.
Unbelievable.
That's a 500x gain, right?
Wow.
So, so do you think that my grandparents, when they bought that house in 1948, thought that $4,000 house would ever get to be $5,000?
No.
Or much less. Let's say it went up 50% and went to $6,000.
Yeah.
Or doubled, went to $8,000. Do you think that they ever in a million years thought that was attainable? $2 million. So, again, I don't see gravity as an economic theory.
I do have to share with you, Jim. I should have told you before we started. I saw a very funny meme, and maybe you've seen it going around social media. And in it, there's a picture of an older person sitting on their front lawn, and it said, "This is a boomer who just sold their house for $2 million when they paid $13 for it and a handful of almonds." I thought, that's about right. It was a handful of almonds and $13, and now you got $2 million. But it's all relative, right? I mean, it's just kind of a funny thing. Now, things today feel a little bit different because already we're seeing like the $1 million price tag. So it seems that people can't afford homes at today's prices. So how in the world would the prices be able to even go up higher than they are now?
Well, it's a valid question. And, I hate to say I don't know, but I can certainly bet money that they will. Mm-hmm. I do know for a fact that, going back to the reference of my parents and my grandparents, I do know for a fact that they had the same conversations about housing prices back then as we're having today. Because my grandparents, when they bought that $4,000 house, they only made $1,000 a year.
That's true.
And going with my dad, when my dad, with his house that he paid $29,000 for in 1971, he was a LAPD motorcycle police officer making $179 a month. And when his mortgage payment skyrocketed from $82 a month to $89 a month, He was absolutely sweating it. And we laugh about it today, but he says it was a big deal. It was very stressful for him.
Can't even get Motel 6 for that anymore. Holy smokes. So obviously this all means that housing prices will continue to go up, that there's not going to be this great drop that so many people are worried about.
No, and we can talk about that for a minute. Everywhere you look on social media, and we do this with my team, we say, pull up your social media account, put in housing market, and it's all about to crash. Everything's about to crash. Add one person after another. But you remember, these are all YouTubers. These are social media people. What is their job? Mm-hmm. Their job is to get clicks. That's just it. Their job is to get clicks. There's no economic theory behind it. If you want to start looking at what, like some well-known people, look at what Warren Buffett's doing. He just put, almost $1 billion investing into the real estate industry. Look at Barbara Corcoran, what she was talking about. She says if interest rates go down, we're going to see housing prices skyrocket. It's going to be like COVID all over again.
Right.
So, yeah, we're going to see a lot of that stuff. Now, traditionally, what's been happening is normally as interest rates go up, housing prices come down a little bit. And as interest rates go down, housing prices come up a little bit. I was on KUSI News not that long ago, and I had a chart for them. I said, this is, let's say you have a $5,000 month payment. When interest rates were 2.5%, for $5,000 a month, you were buying $1 million house. Mm-hmm. But at 7 3/4, now you're buying a $650,000 house for the same $5,000. And if interest rates go to 9, which I think can happen, now you're buying a $550,000 house for that same $5,000 a month. Now, historically, anytime interest rates have gone down, prices have gone up, and if interest rates go up, prices come down. But for the first time in history, the massive increase in interest rates has actually caused housing prices to go up.
Wow.
And that's the reason being, and nobody really saw this coming. The reason being is that we in our history have never had a time where interest rates have tripled in 6 months. We literally went from 2.5 to 7.5% in just 6 months. And what that did is it caused all those people, of all the people that have mortgages, 82% of every mortgage holder has an interest rate that starts with a 2 or a 3 right now. And what has happened is that interest rate has now become more valuable than their house. Mm-hmm. I used to love my house, but now I love my interest rate. And what's that caused is it caused them not to sell their house or not putting their houses on the market at all. And that has caused a dramatic shortage of houses. And this shortage of houses for sale is going to continue for the next 5 or 10 years.
Wow.
And when you use supply and demand economics, prices go up when there's a shortage of supply or demand exceeds supply. Well, we are in a situation right now where we know that there are maybe half as many buyers out there today at 7.5% as there was, 2 years ago, but there's only 1/4 as many homes. So even though demand is reduced, supply is reduced even more. And that will continue for the next 5 to 10 years.
So let's talk about these interest rates, because you've actually squashed some of my fears in our past conversations. Jim Bottrell is with us. He's with the Jim Bottrell Real Estate Team. You can find him online, jimhasthebuyers.com. It's very easy, jimhasthebuyers.com. You can get in touch, contact him, ask your questions, because the interest rate, because it did go up so quickly, I think that's what it is. It wasn't like a staggered increase. It went up fast in a short amount of time. People are panicking and going, oh no, I don't know if I can ever afford to buy a house. Do you expect them to come back down? And then we're going to drill into something really cool you told me about, but let's take a couple minutes here, Jim. Do you expect these interest rates to come down anytime soon?
No, I don't, for a bunch of reasons. You have to, if we've got a couple minutes, I'll go as quick as I can. There were 3 reasons why interest rates were so low. If you want to think about if you want to learn what they're going to do in the future, you got to look at what happened in the past, why they were so low. There were 3 reasons. The first one was a massive oversupply of money that was on the market. And that was courtesy of our baby boomers. Once they turned 50, their expenses are down. Kids have moved out. They're not paying for college anymore. They're making the most amount of money they've ever made in their lives. And they realize, holy crap, I don't have a retirement. So they're saving and investing. So they were saving, and they're a huge demographic, and they were saving massive amounts of money getting put into our institutions and our banks. That's why banks were only paying us 0.01% on our savings accounts for the last 15 years, because they didn't want our money. They had too much of it. So the banks had basically an unlimited supply of money. And then you go to that was the first reason. The second reason that interest rates were so low is because the government was buying mortgage-backed securities, which means that the lenders, if a lender makes $1 million loan, normally they would not have $1 million anymore to lend out. So there's a scarcity amount of money for them to loan out. But what was happening is they'd make, oversimplifying it, by the way, they'd loan the money out. 2 days later, the government would come in and say, okay, we're going to buy that note from you, and here's the $1 million plus $50,000 for your time. And so now the lenders had an unlimited supply of money. And then there was COVID, and the Fed was trying to keep the economy going, so they purposely drove the interest rates to almost zero and causing people to borrow and spend. All right. Now, here's the thing. All three of those are gone. The baby boomers are now in mass retirement. They're not saving anymore. In fact, they're pulling money, or they're not investing anymore. In fact, they're pulling money out. In September of last year, 22, the government stopped buying mortgage-backed securities. And number three, COVID is over. All three of those things were going to happen anyway. Then we have inflation that has kicked in.
Right.
So that's why interest rates are not going to go back down. We're actually probably right where we should be, right about the 7.5. So I expect this to stay.
Now, Jim Bottrell is with us. Jim has a buyers.com. I do want to ask you this question as we wrap up today, Jim, because I think it's really important because you've come up with a way where someone can actually get that bigger house and use their lower interest rate that they have now to their advantage to even save money if they have to go in at 6 or 7% where the interest rate is today. So explain how that could work.
Well, what we're doing, I won't go into too many details on it, because I do want people to call me.
Of course. Give them just the overview.
What we have done is we've looked at this and I said, because obviously somebody says, people need to upsize and downsize. Mm-hmm. I mean, we just helped a family that was in a two and two condo, have 4 kids. All right. They've got a low interest rate of 2.5%. And it's like, we can't move. We can't afford to get that 4-bedroom house with a high interest rate. And so what we started doing is, out of necessity, I really figured out a way. It's like, okay, how can we get these people to get this house so they can actually not have 4 kids living in 2 sets of bunk beds in a bedroom?
Oh my goodness.
And they're different. They're boys and girls in there. I mean, you can't do that. And so we have to figure out a way. And what we did is we were able to figure out a way to where they were able to sell that house and get that new house, that 4-bedroom, and their total payment is actually lower than it was before.
Wow. Now, that's incredible. So if you want to get that bigger house, but you're afraid because maybe you think housing prices are too high or interest rates are too high, call the folks over at the Jim Bottrell Real Estate Team. Call Jim right now. Go online. Jim has the buyers.com. Find out how he can help you make your dreams of a bigger and better house a reality. I think that's very hopeful, and I know you do too if you've been listening and you think, the 4-bedroom is just a dream. Jim has the buyers.com. That's the website, jimhasthebuyers.com. And people can call you too, right, Jim?
That's right. 800-498-SOLD.
800-498-SOLD or jimhasthebuyers.com. Jim Bottrell, give him a call. Find out about how you can get the house you want and put your mind at ease when it comes to those housing prices and, of course, those interest rates. Jimhasthebuyers.com. Jim Bottrell, thanks so much for being with us.